Good morning, UPBOptionMillionaires.com, February 26, 2015. It's the S&P 500 futures chart here, and look at this move we've had to the upside. Seemingly every dip gets bought, especially over the last 10 trading sessions. While the dips have been muted, it just anytime you get the market dipping, it seems just comes right back. And I've equated this to an analogy with a bear trying to drown a beach ball. And each time you try and drown that beach ball, it just pops up, and it pops even higher than it was the previous time you've tried to drown it. And see, this market is now a stone's throw away. The S&P 500 is at just about at record highs. Was record highs yesterday. But if you look, I talked about this before the start of the year. The fact that I thought the S&P 500 ETF, the spiders, was going to see that paint high that we saw back in December. You see this candle here, the wick. We're getting real close to 212.97. Something to keep an eye on, and I think when we reach that point, it's going to be a double top. The irony of it was over a $200 million trade that was erroneously made at significantly higher prices. But yet nobody talked about reversing that trade. You see a lot of times in the market when a big trade is made erroneously, it gets negated. Not this time around, because I think whoever made that trade knew the market was just going to continue to grind higher, which indeed it has. Consolidation here. Some of the major ETFs here continue to break out of long-term consolidation above moving averages. So we have the NASDAQ to QQQ. We have IWN breaking out of a long-term consolidating channel here. Let me see if I have it up on my drawings. There we go. So you see this channel acted as support and resistance, now is broken above it. Apple breaking out to new all-time record highs. I talked about this many years ago as being the third leg in a move higher. We had the first leg up to the financial crisis, second leg up to the highs in September 2012. This is the third leg. We're in the midst of a really sharp move to the upside. Buying back $100 billion of stock. Speaking of buying back stock, Home Depot, look at this move up. Earnings are up 20% since 2012. The stock is up over 300%. Do the math. A lot of it has to do with the fact that companies buying back stock, and they care more about issuing, lining the pockets of their shareholders than they do about their employees. The latest round of buybacks announced yesterday, $18 billion equates to $50,000 per employee. Or $2.3 billion worth of dividends also announced, 59 cents per quarter. And so if you look, the corporation now has less stock outstanding. They are the ones that, just imagine going to the supermarket and you're buying something that's on sale and the supermarket itself is racing to buy that before you. That's what you're looking at these days in the stock market. You've got a stock moving up, you're looking to buy it, but guess what? The company itself is buying its own stock, trying to get it before you at a better price. Yeah, this is the market we deal in, we trade in every day now. So we have Home Depot up to new record highs and continues to blow it away. We have Roth stores for earnings today. After the bell, the stock, again, just like Home Depot, was on a tear. We had a nice move up, consolidation. If you look back, though, the last two earnings reports, significant gaps to the upside. So history would dictate that's what's going to happen. I might add some calls to hedge my put position. I'm in the 90 puts, which would imply a move down to this $84 level, which would close the gap from the last earnings report. Something to keep an eye on. I continue to be in the real estate investment trust. Boston Properties, which has been pulling back from record highs of 146. Looking for a move back down short term to 132 and then ultimately down here to 125, which you look from a chart perspective will be a nice spot for a bounce, possibly put in a head and shoulders pattern. Could we get down to 109 over the next couple months? It's possible. I'm in the March 2025 puts. They're 10 by 50, I believe. But we're looking for downside there also. If you want to look, another one that's got a little more liquid option chain out there. Simon Property Group putting in a nice bear flag here. Look at this. Consolidation here at 190, and I'm expecting to move down to 180. You find long-term support at about 176. How about TLT, which is off the lows OTL? This morning it's starting to rally. Once it hit 126, you pull a trend line across. Great support level. Looks poised to get up to at least close this gap here about 134 before resuming its decline. Same with USL. Crude oil. Again, it's bouncing as well. Off the lows back at the end of January. Pulled back a little bit, starting to bounce, but I think ultimately it's going to head lower. So let's keep an eye on that, which will drag down XLE. The energy ETF, which is bounced, putting what would maybe look like a nice W bottom if it wasn't, to me, if you look from a longer term chart perspective, just setting up as a lower high. Okay, we have the record high here for XLE, a nice bear flag, and to means putting in another bear flag, we're going to head lower. Let's look at biotech, which has been flying off the shelf. Yesterday had a spike intraday as one of the biotech companies was halted for trade. Had a big spike. Let's just pull up the 5-day chart. You can see what I was talking about. Look at this move up from 336. Put in a nice double top. Now you would look from a short-term price perspective, this could be construed as a cup and handle continuation pattern. So let's see what happens here as the market opens for trade today. But I take more credence with the longer-term price action. And this could be either a consolidation phase here. I saw there was some posts talking about this shooting star where we have prices rejected at highs and closing at near the lows of the trading session. Oh, we'll see. Or this could be a broadening topping pattern here, almost a megaphone topping pattern. See, we have the body of the wick of the candle getting bigger and bigger and bigger before the stock finally starts to decline. So this would be the biotechs. All right, UPB here. Just going to be quick. Yeah, we had earnings after the bell yesterday. Hewlett Packard was killed. That was after the bell on Tuesday, and you can see just a decline. Hewlett Packard also buying back a lot of stock over the last couple of years. And there's some sarcastic tweets and articles out there talking about how they've been buying back stock, but also laying off employees. And it's the environment we're in now. It's unbelievable. It really is, where corporations really only care about their shareholders, don't really care about their employees too much. But if you look at Hewlett Packard, I think it's going to head down to 32. We had First Solar also moving to the upside, up 7% on earnings. We had WebMD reporting earnings. The stock was up 8%. And I think there's further upside in that name. We also had Sam Adams. We had Bud earnings this morning. Sam Adams, really sharp decline, 10%. But off the lows yesterday, look at the decline we had to open the session. Off the lows, we'll see possibly closing that gap over the $300 level. All right, UPB, I'll see you in the chat room at optionmillionaires.com. It's going to be another exciting trading session as we watch the market gyrate between small gains and small losses. But I think 2015, the theme is that individual names making big moves. Look at a stock like FEY, which I brought up at the start of 2015. Making its way up to $45, actually, where was it? At $30, it said 45 was, this 10-year chart's not going to do it justice because it hasn't been trading that long. But I said if you drew a trend line across, you can look at the chart I did at stocktwits.com. $45 would be the level, and we're starting to really put in a nice pennant here. And lastly, let me just pull up one more chart, the U.S. dollar index, which I think is going to head over 100 this year. You can look, this is just over the short term. You can see we have a rally off the lows on the U.S. dollar index, but from a longer term perspective, we have the move up. We're consolidating here, and I'm expecting a move back over 100 for the U.S. dollar index. We'll just pull up a 1-year chart. You can see this beautiful pennant formation. You can see prices starting to narrow here, and I think we're going to see a sharp move to the upside. All right, I'll see you in the chat room. Everyone have a great trading session. It's Thursday, February 26, 2015. I'll see you later. Goodbye.